how a trade actually works. What is an entry? What is a stop loss? What is a take profit? And what is risk? Now, most beginners enter a trade without even understanding why they pressed buy or sell. They just hit a button, hit buy or hit sell, and hope. That's not trading, that's guessing. Let me show you how a real trade is structured. So a trade has three parts. Every professional trade has an entry, a stop loss, and a take profit. If one of them is missing, this is not a proper trade, it's gambling. So what is an entry? An entry is where you decide to enter the market. I believe the price is likely to go up, so I buy, or I believe it's likely to go down, so I sell. But here's the key. Professionals don't enter randomly, they enter based on areas, not emotions. Let's say support and resistance, or a trend continuation, or a breakout zone, or liquidity sweep. The entry is based on logic, not feelings. Stop loss. So a stop loss is not, I do not want to lose money. A stop loss is, if price reaches this point, my trade idea is invalid. It's your protection. Without a stop loss, one bad trade can wipe out weeks or even months worth of profits, sometimes even blow some beginners' accounts. So professional traders use it to protect their capital and accept small losses to avoid bigger ones, while ego traders sometimes don't even use it and blow their whole accounts. Take profit. Now this is the level where you get paid. So if price reaches here, the move has done what I expected. So you don't randomly close the trade, you wait for this take profit level. You close where, or you place your take profit where structure is suggesting a reaction, or the risk to reward makes sense, or the trade idea is completed. That's discipline. Now let's talk about risk. This is what actually matters. Before you enter a trade, you have to actually ask yourself, how much of my account am I willing to risk on this trade idea if I am wrong? Not how much can I make, how much loss will I accept on this trade idea if I'm wrong. Most beginners risk about 10, 20, 30, sometimes their whole account on one trade. Professionals risk small, 1 to 2% per trade idea, so they can survive losing streaks. Because losing streaks will happen to every trader. If your risk is controlled, you stay in the game. If it's not, you're out early. How professional traders think? A pro trader thinks like this. If this wins, good. If this loses, good. There are hundreds of opportunities in the market every single day. A beginner thinks that this trade has to win, or I have to win every trade. This puts a lot of pressure on the trader, and of course leads to so many bad emotional decisions. A real trader is someone who plans his trades, plans his risk, manages his emotions, and enters on a logical level. So an entry should be on a logical or a reasonable level. A stop loss is a protection which protects your account or your capital. A take profit is the target you're aiming for the day or for the trade or for this position. The risk is how much you're gonna risk the trade idea, how much you're willing to lose before you enter a trade. That should always be calculated before entering a trade. In the next video, we'll talk about charts and what candlesticks are and how to read price properly. That's where you start reading markets properly. See you in the next one.